Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Telephone number over here is 888-713-2929. If you pick up the phone right now and give us a call, you can get on air, ask me a couple of questions, or just leave a voicemail if you'd prefer to do that. We talk a lot about money, mortgages, things that affect mortgages and your decision in either buying or refinancing in this market. All over the U.S., we are heard on radio and seen on television in certain markets. So if you're out there listening or seeing me right now, rest assured that the market is changing, and it's going to change for a higher interest rate, and it's going to change for, easier standards for you to get a loan. So one is offsetting the other, and hopefully where you're listening or how you're listening to the show, you can take advantage of what I'm trying to say. We bring to the show many times different people from around the country who bring a perspective which you may not have heard, and we try to give a national perspective to a very local show. So we have a juxtaposition of those two things, and I'm really happy once again to have back on the show is Ken McGraw of the McGraw Corporation out of Chicago. Ken, how are you?
Wonderful. Thanks, Jeff, for having me on.
And thank you very much. And one of the reasons I asked Ken to come on is that we do on the show a segment, probably once every 3 or 4 months, about entrepreneurs who have taken a look at what's going on around us in the economy and in the country and say, you know what, I can take advantage, because there's nothing more inspiring than someone to start something new, to get excited, to build something. And I don't care whether it's a flyer business or it's a major oil company. Everybody gets excited when they start new businesses. So Ken, I want to first thank you for coming on the show and ask you, what inspires you to do something that other people aren't doing, i.e., why get into the risk-reward game, which is the entrepreneurial game?
Well, again, thanks for having me on, Jeff. I appreciate it. And what inspires me typically inspires a lot of other people, but it's the willingness to act on that inspiration. All of us have the same challenges in life, the same necessities to provide for ourselves and our families. And there's no doubt that most people I talk to have a wonderful idea for business or a great way to grow the business that they have, but they lack sometimes the initiative to get out there and act on what they know would be a wonderful idea. And that's what I've done over time is take inspiration from other business leaders and professionals that have made it in certain fields and thought to myself, they're no better than me. I can work just as hard as they did and achieve things as well.
What is the secret behind hard work?
Getting up in the morning.
Right? 1 foot in front of the other, maybe a strong cup around 6 in the morning. Yeah, I understand. Exactly right. But there are those people that enjoy the process of trying to, I guess, climb the mountain. There are a lot of Sisyphuses out there, and I don't know if, all the people listening to the audience fit in that category. But certainly those that do push the envelope of what's possible. And I think the optimism that people like you, myself, I guess I could include in that group, bring to the table really helps, I guess, me get through the day. I don't know. What do you think?
Yeah, I agree. It's optimism, hope for the future that there is something better out there, but back to just getting up every day and showing up on time, ready to work, and that separates a lot of people right there for sure.
Okay, you've had some history in business in the mortgage industry and other industries in general. You've also had some history in dabbling in trying to get elected in politics. What do you think is the, I guess, not the difference, but what are some of the similarities in trying to run for public office to affect change that way, or running a business or opening up a business in the business world?
I see it comes back to personal character and integrity. If you have that, you can expect to be successful in whatever it is that you undertake, but always being true to yourself and having strong personal character just in life and especially in business. And people respect that, they honor that, and they remember that down the road. The people that you meet today, you're going to come across them again later.
Yep.
So whether it's a different job or a different situation, that can work to your benefit.
Okay, in our business, the mortgage business, not our business, in my business, in the mortgage industry, it's small. It's a lot smaller than people think. We're out here in Southern California, and as you know, Malibu Funding is in probably 10 states right now. And we encounter different situations all over the country, but being true to what you are versus portraying yourself as somebody. Because I know in politics, and you know it as well as I do, people portray a certain somebody that they are, which in reality, they're not that at all. How do you make sure that the message you're, I guess, pushing out there or providing to the general public is the same authentic person or, message that you are as a person?
Well, it goes a lot to the people that you allow around you, whether they're working for you, working with you, or the people that you hire. That speaks volumes to your personal way of doing things and your outlook on life. So you can be true to yourself, but then be very aware of the people that you allow around you. And I've used that to my benefit and my success in most things that I've done, for sure, because we can never do it by ourselves to grow something big.
No, and you don't want to do it by yourself. No man's an island, as the old expression would say, and I 100% agree to that. I know I have a wife, I have children. I certainly have had business associates for absolute, 10, 15 years, and the people that work in the office and for the company, the general obligation to them as people comes way before the obligation of me to, I guess, make money. I guess that's the real issue here in a lot of what we call ethics in business. And part of the entrepreneurial spirit that I think you bring is understanding it. Yes, we're all looking to make a buck, but at the same time, without understanding the nature of how you do that, the people you surround yourself with is probably as important. Do you agree with that?
I agree 100%. Right. Absolutely.
Okay, so in your current endeavor, and for those of you listening to Ken now, Ken is on the precipice of doing some great things, and so is somewhat prevented from talking about them, which I 100% respect, but just wanted to let people know that we're not being cryptic haphazardly. We're kind of talking around the edges here, with which in the future we'll have Ken back on, and he can really explore what's going on in his life and what's going on in his business world, which is extremely exciting. When you're an entrepreneur and choosing the way by which to grow and fund your business, what do you say are the advantages of the different ways that you might be able to do it?
The advantages far outweigh the drawbacks to doing something for yourself, for sure. And taking the chances and expecting the rewards, it's most important for me, but especially for the people around me. That's what makes it all worthwhile at the end of the day. Those ups and those downs, to change the standard of living for the people closest to me and then the people that work for me, that's actually the most rewarding and fulfilling part of being an entrepreneur and striking out and doing something for yourself, is you reap the rewards for years to come, and especially in changing the lives of the people closest to you.
A little bit more locally and a little bit more lighthearted. What's wrong with the Cubs this year? Jeez. What the heck is happening? I was expecting this great Dodger-Chicago Cub rivalry for years. It looks like it's going to last 1 year.
Yeah, well, we got to the big dance and we did it, and I guess we can relax for a while. We waited 108 years for this one.
It's so fun. It's so funny. As you know, or you may not know, I'm from Boston, Massachusetts, and Theo Epstein, who runs the Chicago Cubs right now, was in Boston for an amazing 2 World Series runs, and now in Chicago. So I know the way Theo does business. As long as you have him, you have no problems about the future.
Yes, I agree. I feel pretty confident in him myself.
Yeah, exactly. Well, I really appreciate you, Ken, coming on the radio and talking a little bit about the spirit of what makes America great, which is the ability to get out there and do something, and then providing us with some of the information about, how exactly you're going to do that.
Yes, indeed. Anytime, Jeff. I appreciate the time.
And thank you very much. And, of course, that's Ken McGraw from the McGraw Corporation. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word-of-mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
your nose just a little bit. I need the sun off. There you go. When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography. There you go. Good, good, good. We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out. ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are going to be at 3.5. So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, take better pictures, check out one of our workshops. You can check out JeromeHamilton.com. We have a workshops page that'll get you there. We bring the top of the line models to all of our events, and we take you to the best places.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the phone number. Pick up the phone and give us a call. You can also reach us by email if you do kind of email. A lot of people don't anymore, but I certainly do a lot of emailing. It's info@malibufunding.net. That's our info at malibufunding.net is our email address. If you want to see us on Facebook, and of course we have a great social media presence. We're on Twitter, we're on Facebook, we're on YouTube, but our Facebook, if you go to Facebook, type in Home Loans, Malibu Funding Inc. Don't forget the Inc. part, and we pop right up as we do many times, bring people to the show to talk about not only what's happening locally, the programs, the things that might affect today's decision to get a mortgage, but in the long run, most of the mortgages have to be bought and sold in order to reliquify or bring funds back to people like myself so that I can lend to you. For many, many years, we have been without a second market other than Fannie Mae, Freddie Mac, and Ginnie Mae, and those are, of course, quasi-government sponsored entities. But I was looking through the internet, and I want to bring on Eric Morkinson from Angel Oak. Eric, how are you?
Well, thank you very much, Jeff.
Okay, great. And one of the things, as I was just saying, I'm reading on the internet as I do every day, and most people get their information from the internet. I go to Mortgage News or a bunch of other sites, reading about how Angel Oak is reliquifying the secondary market on non-QM product. Now, for everybody out there who doesn't know what the heck I just said, for people who don't fit in the normal box of a Fannie Mae, Freddie Mac program, there are companies out there that will do programs that will be able to fund loans non-traditionally. Good loans, good borrowers, but who don't necessarily fit in the box of a traditional loan sold to those two entities. Well, in order to get money to lend, they have to take those loans, package them up, and sell them to somebody. Well, Angel Oak has just completed their second round of that, and we're very excited because that means that once the secondary market comes into play, the private sector, which is where we used to be traditionally, that means that we have a lot more opportunity to lend. Eric, take it away. Let me know what you guys have done and how you've been doing it, and how excited are you about doing it?
We're really excited about it. I mean, it has been 9 years since the financial meltdown, and nobody ever thought, subprime loans would ever be back, much less getting a AAA rated securitization. So that is exciting. So, and as you mentioned, the more of these securities that take place, the wider the product offering is out there. Now, this is the very beginning of private capital re-entering the mortgage space.
I think it's terrific.
Up until now, as you mentioned, Fannie Mae, Freddie Mac, all the agency, VA, FHA, those are all backstopped by you and I and everybody listening as taxpayers. These programs are not backstopped by the taxpayers. They're absolutely, it's all private capital, and the pricing on these loans are all risk-based price. This is capitalism at its finest hour.
Right.
The riskier, the lower the credit grade, the higher the loan-to-value, the higher the interest rate.
Right. Right, which is really what many in Congress would prefer, to have the market be 100% when there was a great deal of push towards getting rid of Fannie Mae and Freddie Mac. This was the model that everyone was looking towards. Of course, it didn't happen, and it's not going to happen, but traditionally we've had at least 50% of the market risk-based. And so returning to that, to me, is a way by which we're signaling, I guess, to the general public that, look, the economy's better. we feel good about these loans. And give me an idea of your typical borrower and what kind of products you're delivering to them.
Well, our typical, one of our most popular programs are the non-traditional income borrower. We find it a better indicator of what somebody makes versus what by what he's depositing in his business or his personal checking account versus what he tells the IRS with what our 70,000-page tax code in this country. And if you're self-employed, literally you have a boatload of write-offs, and we're doing bank statement loans instead of full doc loans that go to the government. Another aspect of our business is the credit-impaired borrower. I look at the millions of folks that have had a short sale foreclosure, even a loan modification that traditionally they have to wait 4 to 7 years. We think that's silly. You can do a loan one day out of bankruptcy with these Angel Oak products. Why make a guy wait that can prove the ability to repay the loan today?
I agree. And what do you think about the trending credit that's coming aboard that will eliminate some of the debt on your credit report? How many new borrowers are going to come into, these kind of loans that you're talking about because of that?
Nobody really knows. I know it's going to affect one credit agency, and nobody really understands. I think it's going to, we all think it's going to raise the credit score a little bit, but that is yet to be seen.
Oh, I see. So in what you guys are looking at, you're still looking at the same programs with the same type of borrower with credit impairment, even if what the government is saying and what the credit agencies are saying, or they're going to have tax liens fall off and a couple other things fall off that may not impact your credit score at all.
Well, and with these guidelines, if you want to go to a VA, FHA, or a Fannie Mae or Freddie Mac loan, and you have a tax lien of some sort, they want that tax lien paid before you can do the loan.
Right.
With Angel Oak, we'll even allow the borrower to even be under a payment program with the IRS and not have to pay that and still get financing.
Now, your typical rates, and everybody talks about rates, but if you can't get a loan anywhere else, the rate really doesn't matter. Am I right about talking about it like that?
Well, the rates are a funny thing. Mortgage rates are deductible, so you have the mortgage tax deduction. So what you're looking at is your effective rate. Now, your rate on a credit card, that's the rate you pay.
That's
the
right.
Rate on a mortgage, let's say if it's 5%, but you're in a 40% tax bracket, well, with that said, your effective rate is about 2.25%. So it's all relative, whatever tax bracket you're in, and what you really need to look at is your effective rate. Now, these rates can start in the 4s and go as high as the 9s, depending on how impaired the credit is and how high the loan to value and how high their debt to income ratio is. But all these loans, Jeff, they're all ATR compliant. What that stands for is the ability to repay.
Right.
We are very disciplined in our marketplace today on these loans that we do not do loans for folks that cannot document the ability to repay the loan, and that's not difficult to do.
Right, and that takes it out of the realm of risk in terms of both of what the government is saying that we have to do through CFPB on a traditional loan, which is the ability to repay is the number one criteria in everything. And so this is quite a bit different than, let's say, an equity-based loan only, right?
That is correct. There is no more. The Frank Dodd Act made it illegal for a lender like ourselves to do a loan on somebody's primary residence based on simply the equity in that property. That is now illegal. So we have to document that they have the chops or the ability to repay the loan. We cannot just depend on, well, it's a very, it's only a 50% loan to value, or they have all that equity in the property. They'd never walk away from that. Let's do the loan. You can't do that anymore. We have to document they have the ability to make these monthly payments.
Now, the size of the market of people that can take advantage of products from Angel Oak, how big is that market? Because I was looking and I saw that the actual market is huge, but I'd like to hear it from somebody in the business. What are you looking at in terms of potential customers, let's say right here in Southern California?
That's a great question, Jeff. And it's very elusive. We do non-traditional income bank statement loans. So there's really no database of self-employed people out there that are writing off, that are taking advantage of all their write-offs and are not documenting enough income to qualify for whatever mortgage or whatever house they want to buy. There's no database for that. So it's really difficult to get our hands on that. Another aspect of our business, as I mentioned, is credit impaired or subprime borrowers.
Right.
Now, there is a database, credit data, that you can find for people that have impaired credit, but do they have the down payment? You see, we require at least 10% down on credit impaired borrowers, 20% down. So the borrower has skin in the game on these. So
Of course.
there is no database on how much money somebody has down on a property that's credit impaired. Another aspect is non-warrantable condos. So we believe the market is significant, but it's very hard to try to determine what the size of it is right now.
Okay, very good. Hey, we are up against the clock. Can you shout out your telephone number in case somebody wants to contact you directly about one of these terrific products?
Certainly. Eric Morganson with Angel Oak. I am at 949-554-5000. That's 949-554-5000.
Eric, thank you very much on short notice for jumping on and explaining a little bit about this. I'm very excited for what's happening. Thank you.
Thank you, Jeff.
Okay.
Have a good weekend.
You too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
Your nose just a little bit. I need the sun off. There you go. When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography. There you go. Good, good, good. We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out. ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are going to be at 3.5. So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, take better pictures, check out one of our workshops. You can check out JeromeHamilton.com. We have a workshops page that'll get you there. We bring the top of the line models to all of our events, and we take you to the best places.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word of mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone and give us a call. We talk mortgages. We talk borrowing. We talk purchase. We talk refi. We talk whether you should even do this or not. Look, we're going to give you an honest assessment of who you are and what you are financially so that you can make the best possible decisions out there in the marketplace. We are in a number of different states, so if you need to talk about lending in California or in Virginia or in Chicago, Illinois, pick up the phone and give us a call. Also, you can reach us by email, info@malibufunding.net. We are on Facebook. We're also on YouTube. If you go to Financing Mortgage and look at what we're doing, you can see the radio show as well as a number of other educational videos on different products in the market. They're on YouTube, and we've been doing that for a number of years. Very good outlet for us, as well as obviously Facebook and Twitter. @Jeff6493 is my Twitter handle. And again, I hope you tune in every week as we will be here to talk to you about mortgages and refinances. From Chicago, once again, a second guest today from Illinois, and I really appreciate this next guest, Charles Giscombe, for coming on to the show. Charles works for us in a number of different capacities, but I wanted to, first of all, hi Chuck, how are you?
Great. How you guys doing today?
We are terrific. Thank you very much for asking. I wanted to ask Charles to come on the show because secondary market is really picked up in a lot of non-QM space. What does that mean? That means that if you have the desire to do a bank statement loan, or let's say you've got some income that you want to write off on your taxes for your business and you want to get a loan, you can't go to a traditional bank for a conventional mortgage. So the only way to get a loan done is to go to a non-QM or non-traditional bank. Angel Oak was kind enough to come on and tell us about their products. But what happens to that loan once it is funded needs a place where it can be sold so that the funds get replenished and you can get the next loan of this similar type. So bringing Chuck on, because he's dealt with secondary market in a number of areas. Chuck, can you just give us a brief explanation as what happens with a loan in this sector once it is funded? I mean, how does the securitization of those loans happen?
Well, in a lot of cases, what happens is these non-QM, there's a lot of non-QM portfolio lenders that specify in this space. And a lot of them may deal with getting finances from hedge funds in different situations. So what happens is they have they create a will well. They have a parameter and a guideline that they're comfortable with, and it obviously has to do with, obviously them making money on top of their investment or their funding of it. So what happens is when you get these non-QM loans, we'll get them done, we'll broker them out, or we either correspond and lend them out, and this particular entity will service this because obviously it takes care of their investors if they're a hedge fund or they're just a servicing entity that has a portfolio that loves this type of asset in their portfolio. So in many cases, what will happen is if you're a correspondent lender for them, we'll fund the loan with our money. Okay, we'll take that loan, and that loan will be then make sure that it meets the underwriting guidelines for that particular portfolio lender or that servicer.
Sure.
And then they'll take that loan to replenish for us, Jeff, and then we're on our way back into what we do again, and that is lend.
Okay, so just to be clear on it, you get the money from wherever it's gotten from, comes to a company like Malibu Funding, who then lends to a borrower in this space. That loan then gets held because do you think that those will be securitized through bonds, much like it is with Fannie Mae and Freddie Mac? Or do you think that market's coming back? Because that's the market that's really going to spur a lot of this newer type of loan to even good borrowers who may either have a credit challenge or may have this income through their business that they're trying to both use as a write-off as well as to get a loan.
Correct. I do believe in most cases that market is coming back, but a lot of these lenders, that's what I'm talking to, or these servicing entities, they hold on to these loans, Jeff, and they service them in their own private portfolio because they're looking at their books and creating and getting assets with low LTVs. I mean, the reality of it is that if a borrower goes belly up on this situation, a lot of these loans are LTV loans, and so these guys can cash out on these loans if the borrower can't perform on these loans. So really, a lot of times they're more asset-based than anything else. And obviously, if you do have a credit challenge, you're not going to get the prime traditional mortgage that you would normally get, if you're dealing with the QM. So I understand what you're saying as far as securitizing them. But as I'm speaking to a lot of these lenders, they're like, listen, this is our service and portfolio, and I'm quite sure they have it securitized against, obviously, they have to have it securitized against, whatever that might be.
Right.
But the reality of it is when they're holding on to that, Jeff, they're looking for it. If it goes belly up, we're in the money.
So basically, you have two different entities competing in this space, whereas by maybe 4 or 5 years ago, you didn't have anybody in this space.
Exactly. Well,
that's right. That's good for the borrower, right? I mean, obviously, if you've got competition in the marketplace for a certain type of loan, that's going to affect the borrower's choices, i.e., if there is competition, which is what we try to spur in any lending situation, is we always tell the borrower, look, go out and shop around. Just don't take the first deal in the door.
That's right. Well, Jeff, with us, the beautiful thing about Malibu Funding is that we deal with both sides.
Right.
And at the end of the day, if you want a traditional product, whether it be Ginnie Fannie, Freddie, whatever it may be, Malibu is a wonderful situation because it entertains both sides of that. A lot of loans can't meet those financial requirements that are necessary for traditional loans, so you have to go to a non-QM world, and these are more lenient. And what they're doing is they're catered to the individuals that are more so now, post-crash. So post-crash, you have individuals that are dealing with certain credit issues Or
Right.
there's individuals that have, don't want to provide tax returns because their business is this way, or they may not have certain things, but they have bank statements and they're making money, and they may have a decent credit score. So you love that with Malibu Funding, you can take them from the traditional route, or we can go to the non-QM side that doesn't have all the red tape that a normal loan may have. And that's what, and that's one thing about Malibu Funding, Jeff. We're touching on everything. I like to say that we have no turn downs. If there's any turn downs, we can then take it from here and take it to the next, and take it to the other side on a non-QM well and make it happen. And I do, and that's what I do love, the versatility and the flexibility that we have in Malibu.
So the geographic challenges, whether you're in North Carolina, whether you're in Chicago, whether you're in Nevada, whether you're in Los Angeles, do you see that there may be geographic challenges here as well as, let's say, income or credit challenges, or is a borrower regardless of where they're from?
You know what, Jeff? A borrower's a borrower. At the end of the day, the one thing that I always, wanted to do, I always wanted to make sure that that we were able to take the borrower, look at their situation, and make sure we can tailor fit a program for them, because there's a lot more individuals that don't meet the traditional guidelines. So
Right.
a borrower is a borrower. At the end of the day, the wonderful thing about it is if you have a credit score, regardless of where you're from, if you have bank statements wherever you're from, if you don't have tax returns or you only have 1 year tax return, whatever you are and wherever geographical area you come from, there's a loan for you. And these non-QM programs provide the opportunity to do that, Jeff. And that's what it is. And because of that, what's happening now is that you see that Fannie, Freddie, they're starting to lighten up some guidelines and try
Yes,
to
they are.
fit their situation and loosening up a little bit, because they know that these other loans are getting done. There's good loans being done, and there's good money being made, and so they're starting to loosen up a little bit because the competition, like you said, Jeff, is good. Competition is always good.
Competition is good, and I saw that 36%. The refi volume is down from last year, so obviously everybody's looking for loans, right?
Everybody,
Right,
yes.
right.
Every single person is looking for loans, Jeff.
Right, exactly right. Hey, shout out your phone number for those people who would like to get in touch with you about some of the knowledge, and obviously you've got base in a lot of different places.
Absolutely. To get in touch with me, still have that Las Vegas number, Jeff. Call me at 702-328-5191. And you can also reach me at charles@malibufunding.biz.
Okay, great. Hey, really appreciate it. Thanks for taking time out from your vacation, and we'll talk to you real soon.
I'm sorry for the noise, but I do appreciate it. Always a pleasure to be on with you, Jeff.
Thanks very much. And that's Charles Giscombe from Malibu Funding on the road in Chicago, Illinois. And I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
Is your car starting to give you some trouble? Then come on down to Gyra Tire Shop and Service, where we offer a wide range of services such as new and used tires, balance and repair, brakes, AC repair, professional auto diagnostics. We promise you high-quality service at an affordable price. We're located on the corner of Boulder Highway and Wells Street. Do yourself and your car a favor. Come down to Gyra Tire Shop and Service.
Your nose just a little bit. I need the sun off. There you go. When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography. There you go. Good, good, good. We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out. ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are going to be at 3.5. So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, take better pictures, check out one of our workshops. You can check out JeromeHamilton.com. We have a workshops page that'll get you there. We bring the top of the line models to all of our events, and we take you to the best places.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the phone number. If you pick up the phone and give us a call right now, we can talk about mortgages, and that's what the show does. We talk about your mortgages, your ability to get a mortgage. Maybe you want to refinance your property because you need money. You want to buy that investment property in Las Vegas, in North Carolina, in Virginia, in wherever you want to go, or maybe you have some medical expenses. There's college. There's all kinds of reasons that you might want to take some money out of your house, and refinance makes sense. By the way, let's talk rates right now. Rates have gone up. Even though the Federal Open Market Committee meeting decided not to raise short-term rates, rates did go up this week. So this tells you a little bit about what the thinking is long-term. We're going to see, and this always happens, pricing in the market takes place 30 to 60 days before the actual change. So if we're seeing rates go up now, it means that the Fed is thinking about raising rates in 6 weeks. So if you're looking towards September, maybe October, that's when rates are going to get rise again. And I think they'll come up by another quarter point. But rates today, 4.12% is the rate right now for a 30-year fixed in general. If you go to rate.com, if you go to mortgagerate.com, if you go to bestratecapital.com, if you go to malibufunding.com, you will see a number of different indices which will indicate rates all over, but generally speaking, it's 4.12% for a 30-year fixed. 15-year is still below 4%, and the FHA is probably 3.98%. What we're seeing is a gentle raise year over date of about a point. A year ago, right now, we were in the low threes. Of course, now we're in the low fours. But historically speaking, hey, this is a tremendous rate. So if you're out there and you're thinking, I need some money right now, property values have been going up at least 6 to 10% a year for 3 or 4 years. I don't know if that's going to last a long time. There was some talk today online about whether we're seeing some reverse curves in the yield spread of certain indices to indicate long-term instability in the economy. Now, that could be offset by the fact that the Treasury said, and the Fed said, rather, that they're going to start unloading all that QE stuff that they purchased during the quantitative easing 1, 2, and 3 during, I guess, Bernanke and Yellen's terms in office. And of course, you all remember what that meant. It meant that the Fed was purchasing long-term debt either through the bond market or in the mortgage-backed security market. And they've stopped doing that. And now they're going to reintroduce those particular holdings. I'm thinking it's about $3.5 trillion on the Fed's balance sheet that they're going to now introduce into the market and sell it off, which I think is a good thing. But I think that's why this curve was kind of upended today, and it sent markets reeling a little bit over the past week. And what I mean by markets, I mean the stock market. Now, I'm not a FC, and I'm not somebody who really knows enough about it, but in reading it, I can tell you that the mortgage rates are going to be affected long-term when that happens. We're going to see the reintroduction of that quantitative easing debt into the marketplace, which is going to be sold off, and it's going to tighten the money in the market, which will obviously make the rates go up. So if you're out there right now and you're thinking about any of this stuff, and I think it's all important, if you are thinking about it, to sort of give a cursory look at the economy, your job sector, your local area. We all don't live in a bubble, and since we all live in these news cycles, which last about 4 minutes, make sure that you're understanding long-term what's going on in your industry. If you're in the trucking industry, you're worried about fuel prices. If you're in the building business, you're worried about wood prices. You know, these sort of things that are obviously important to those in those industries obviously affect you when it comes to buying a house, selling a house, whether you want to move, whether you want to scale up, scale down, however it is in what you're doing with your loved ones. Want to get a couple things in the news beyond what we're talking about here. The compliance and the regulatory atmosphere. Okay, so lawsuit going forward between the CFPB, mortgage company, about the fine that was levied. We talked about it several times on the show. Nothing's really happened. We're waiting for a decision to be handed down as to what will happen, whether that particular fine will be overturned or whether we go on to the next level of a court case, which would be obviously the Supreme Court, obviously being the fact that the Supreme Court is conservative. We're looking at sort of, I guess, the decisions coming out from the Supreme Court supporting, I guess, the marketplace. I think getting out of setting policy through Supreme Court decisions is what they're going to be doing, whether it's Citizens United, whether it's campaign finance. I think getting out of whatever is not in current law, meaning if Congress hasn't voted on it and passed it, they're probably not going to rule on it, meaning that they'll let stand what is according to current law. And that's a traditionalist view of what the court should be doing. It's not a progressive view of what the living document, which what they progressives call the Constitution, versus a literalist view, which is what the conservatives call it. So what we're talking about in all of this affects your mortgage, your decisions to lend money, your decisions to borrow money. So let's get into it just a little bit here. Does anyone out there disagree that mortgage loans given to people who can't document their income help cause the credit crisis? Okay, so what are they talking about? And we on the show today have been talking about it too. Different kind of loan products. So if you're saying a stated loan, what does that usually mean to most people? It means crash in 2008. That's what it means. It means if I tell you what I'm making without proving what I'm making, that is going to cause the crash. And did it cause the crash? This is an argument that has been made right down the line from the beginning of the bailout of the banks to even today. What is happening in the market to determine for us whether a loan that was given at a certain time caused the mortgage meltdown? Well, when talking to Charles in the last segment and off air, we were saying, look, the front end of these loans, and I'm dealing with a situation right now where the front end of the loan, based on what the product was offered at the actual investor, an investor is someone who buys a loan that I fund. So if I fund a loan and the investor says, yeah, we'll buy that loan, and I give them the loan and they come back later and say, hey, wait a second, this loan should never have been funded, who's at fault for that? And times a million loans, does that affect the economy, i.e. the mortgage meltdown? So this is the give and take in the private market sector that happens all the time in most businesses. The problem in the mortgage business is that we have $53 trillion worth of mortgages out there. So if endemic in the system are 20%, 25%, which is what happened during the last recession, of loans are bad, meaning that you can't document the income in order to pay off the loan, then you've got a problem. I don't think that's the case with these type of loans. I don't think that's the case with the market in its current state. I think borrowers out there have to be able to borrow money to be able to purchase homes. And in a market where the real estate market has gone up, guess what? You're going to have more and more borrowers who are going to go to non-traditional loans, and those non-traditional loans have to find a home to someone to buy them. If the front end is tight, i.e. the originator is documenting, we should be okay. Hey, listen, I'm Jeff Barton. I really appreciate you all listening to the show, and we'll be right back.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word-of-mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
Your nose just a little bit. I need the sun off. There you go. When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography. There you go. Good, good, good. We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out. ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are going to be at 3.5. So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, take better pictures, check out one of our workshops. You can check out JeromeHamilton.com. We have a workshops page that'll get you there. We bring the top of the line models to all of our events, and we take you to the best places.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Telephone number here, 888-713-2929. Our email address is info@malibufunding.net. We are on Facebook. If you go to Facebook, type in Home Loans, Malibu, what is it? Home Loans, Malibu Funding, Inc. That's what it is. You know, when you do this job a long time, you get to do these things by rote, and then when you finally listen to what you're saying, you're like, is that really what it is, or am I just, and I apologize to everybody listening out there, but usually at the front end of every segment, we try to give out a little bit of information about who we are, like our NMLS number, 79620, my personal NMLS number, 79687. All of these things are by rote most cases. If you're talking to someone out there and they're giving you a by rote answer, it means that they've done the job a long time, and it's just part of their responsibility to tell you things. That's called bureaucracy. I hate it. I don't like it, but you know what? We all have to deal with it. I was talking to a company yesterday out of the state of Illinois, and they were telling me, look, you have to call in every 60 days. I said, why do I have to call in every 60 days? They said, why? Because that's what the state of Illinois wants you to do, or else we can't do business together. I said, well, that's ridiculous. They said, yes, it is ridiculous. But again, that's what the state of Illinois wants you to do. So we all deal with the bureaucracies. As I said, everybody stands in line. Everybody's stuck in traffic. So I certainly understand it. But if I'm doing it to you all, I apologize. I don't mean to do that. Okay, a couple other things that I was talking about in an earlier segment. Again, I'm Jeff Barton, your voice in the mortgage industry. And my Twitter handle is @Jeff6493. where I tweet out some daily musings. Usually it's positive stuff about me, myself, and I, because that's currently what I'm trying to promote here with Malibu Funding. We're on YouTube as well. Go to YouTube. Financing Mortgage is our, I guess not homepage, but certainly our channel is what they call it. And you can see a number of videos. This radio show will be up and on there, as well as our Las Vegas real estate show that we've been shooting for about 6-8 weeks now, and I'm very excited about that. Okay, higher interest rates send mortgage applications tanking, down 7.4%. What does that mean? It means that the marketplace is tighter for the loans that currently exist. And why is that a big deal to you? Because lenders such as Malibu Funding, such as Chase, such as any number of ones out there that you can think of, have to think of ways to develop products to adapt to this type of mortgage marketplace. There are a number of people that work for large banks that have to be employed. If those people, if the bank can't make money, and by the way, that was the whole impetus behind all the fake accounts that were not only with Chase, but I'm sure with a number of other different institutions. The reason for that was increasing fees in order to pay for their huge overhead. Everybody deals with that. So if your business is off 7%, what is it, 7.4%, it means that when a company like mine does, let's say we do 50 loans a month, okay? If Bank of America does, 50,000 a month, you can imagine down 10%, down 7%, the amount of money they're not bringing in. So what does that mean? That means layoffs are imminent. So in the mortgage business, those companies, even companies like Malibu Funding, will begin to develop products which will expand the ability for borrowers to get loans. Does that mean they're bad loans? Well, I don't think so. And why do I say that? Because the strict, guidelines for us to be able to prove that you have an ability to repay. And that's the most important thing on most loans. Can this loan be paid off during the time with which we have a loan to lend to them? Whether it's 30 years, 15 years, whether it's a 5-1 ARM, can you pay the loan off? And so that's the most important criteria, and that has not really changed. What has changed is the ability to say, okay, you got a business, you run your business, and you write off a lot on your business. Maybe we can use those business bank statements, the amount of money rolling through your business, if you're a entrepreneur, a business owner, a sole proprietor, instead of what you pay on your taxes. Maybe the business bank statement loan is a good loan because we can see based on that you can repay the loan, because what you're doing is you're writing off your car, you're writing off your office expense, you're writing off a number of different things. So if we take that particular write-off and take that away and move the income over to your personal side, yeah, it looks like you can repay the loan. And that's what we're trying to do. You also see tremendous amount of equity loans. If somebody has got 25, 30% into the loan, have a $100,000 loan, you have $30,000 in the loan, the chances of you walking away from $30,000 in equity is low. That's a good loan. You combine that with the ability to repay, well, maybe you look at the credit score and say, you know, the fact that the person has below 600 is not a big a mitigating circumstance. And the other thing is, if someone has a low credit score but other mitigating circumstances are high, that means that the risk to the lender is less. You're going to get a better rate. So these are the type of openings that happen when we see mortgage rates, not mortgage rates, but mortgage applications down. Means that the products that are out there are going to be up, but the product quality is going to be good, even though they're opening up the mortgage industry, the mortgage loan to other three people. Okay, Daryl, I want to bring him in just quickly. Read an article about middle class. So what is the definition of middle class? Who is middle class economically? What are the parameters?
Well, it probably the parameters are established by their median average income, I would imagine.
Well, what is it? What do you think it is? Just give me an idea.
Middle class is probably in the $50,000 to $70,000 a year income range.
You know, it's funny you say that, because I would think everyone's definition of what middle class is, I'm a middle class person, okay? If you make $100,000, $150,000, $250,000, you're still middle class. If you make $30,000, you're considered lower middle class. It's a huge income disparity.
But if you make $30,000, the person that's making $200,000 to them is not considered to be middle class to them.
Right, but like you say, the government looks at it in a completely different way. And I was looking at charts yesterday, and it showed this really thin line that just got a little bit bigger until you got people making over $1 million. Then it got really tall. Now, those are the upper class people. Everybody else is in the middle class.
So less than $1 million is middle class until you get to the poverty level.
Exactly, and poverty level in this country is below really 30,000.
20,
it's really 14, 15,000, but you know, you can still, I remember in college. You remember college?
I do. I remember Jack in the Box in college.
Okay, what were you making there? $5 an hour?
Yeah, maybe. Actually, during college, right before I was waiting tables, which means they could pay me below minimum wage because they took out a food allowance and a tip allowance. So
okay,
$1.25, I think, an hour.
Exactly. Now, my daughter works as a bus person over at a local restaurant, and in L.A. County, L.A. City, they're looking to up the minimum wage to $15. But what happens at most of these fast food places, they're going to all be replaced by robots. No person is going to be doing that job anymore.
No, I don't think so.
So what happens to the person who needs a job, who's 16, wants to do a summer job from high school? Where do they get to work? Because traditionally that was how they worked.
Yeah, those jobs are going away.
They're going away, right? Because those jobs were never meant to be full-time jobs. They were always meant to be entry-level jobs, right?
Yeah, of course.
Okay, so what happens to those people? I have no idea. So let's talk about middle class. What is it middle class lifestyle like? I mean, what kind of house does a middle class person buy?
Well, until recently, middle class people didn't buy houses.
What did they do?
Well, they rented.
Oh, you mean generally since
Yeah.
2008?
Yeah, because they couldn't afford it.
Because you can't afford it. And what the marketplace being what it is now, I kind of agree with that right now. They can't afford it right now.
And it's going the wrong way for them at the moment.
Yeah, exactly. And I think right here in the Los Angeles market, and for those of you who are in the Las Vegas market, which seeing this show, similar things out there, although the median price out there is, you can still get a house for $150,000. You can still get something for $150,000, $200,000. In Los Angeles County, in San Bernardino, Riverside, forget it. Unless you've got $300,000, $400,000, you cannot get into the market.
There are parts of the country. I mean, first of all, we live in Southern California because of the amenities and the weather and the closeness to the mountains and the sea and the desert and all of that. But there are parts of the country where you can buy inexpensive housing.
Yeah, absolutely. So
But
if
it's
you're
not here.
Yeah, if you've got a house and you're looking to get into the retirement community, you probably want to retire outside the Los Angeles, Southern California, San Diego, San Bernardino, Riverside markets. I mean, you really got to move.
No question about it.
I mean, I just think that's the way it is. Daryl, thanks for jumping in. I
Pleasure.
really appreciate it. I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word of mouth advertising. And according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
Your nose just a little bit. I need the sun off. There you go. When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography. There you go. Good, good, good. We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out. ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are going to be at 3.5. So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, take better pictures, check out one of our workshops. You can check out JeromeHamilton.com. We have a workshops page that'll get you there. We bring the top of the line models to all of our events, and we take you to the best places.